Let's say you're planning out there to go and invest. You're supposed to understand these two different terms because some people approach me and do so in a wrong way. You're supposed to understand the long-term goal and short-term goal. Because some people tell me, hey, Joseph, I would love to be an entrepreneur. Hey, can you give me an idea where I can put my money? I ask them, you want to invest? Yes, I want to invest. And for how long you want to invest and make some difference in your life? Hey, I want to do so in one period, or rather 1 year period. And I ask them, what exactly do you expect to get in one period of the year? And they say, hey, I bet this is a long period of time. Hey, let me tell you one thing. Let me shed some light on this information. You have to understand what it means to invest. All right. And I made a video about then what the difference between businesses and investments. Investments, we say they have low returns and they usually have what you call the low risks. It means then you have to invest for quite a long time for you to realize a difference. All right, that's the difference between investments and the business. The businesses, on the other hand, they have high risk, high returns, whatever. You don't have to do so for blah blah blah, and those kind of things. Okay, so if your investment, as we speak right now, it is less than 5 years, then consider it as a short-term goal. All right. And then you have to ask yourself, for the sole purpose of you investing this area, do you want to get yourself some cash flow? Maybe you want to pay some, school fees in future. You want to get some cash flow because you want to embark on building, maybe say your house or something of sort. So how you invest and the period of the period that you invest on really defines whether you're going to get yourself into the entrepreneurship or you're just an individual who is looking forward to not just having the idle money and what have you. All right. So whenever you're investing in an area whereby you're saying, hey, I'm doing so for the next 2 years, fine. Maybe you just want to keep that money somewhere for the next 2 years, get the interest, at least get yourself, or position your money above the inflation so that you don't lose your money. And then after that, you can withdraw your money and invest in a conventional business. If you're doing that, amazing. But if you're focusing on, let's say you want to invest into buying stocks or shares or index fund or balance fund, bond fund, money market fund, circles and what have you, then you have to look at it from a point of a long-term investment. And this is the reason why I always ask somebody, hey, you've made a call to me, you would like me to take you through on the investments and the business. Because some people just approach you and tell you, hey, I want to invest some money. They don't understand the difference between investment and the businesses. Not until I shed some light on that, that's the time they tell you, oh, okay, I think I'm in need of a business, not an investment. That's now time you take now to that direction. When they tell you I'm looking forward into an investment, they define investment, I'll say, aha, I think now I understand. So exactly when you're getting yourself into the investment, this is why I always tell people, when you're putting your money into an investment, let's say you are getting your money into the treasury bonds, for example, which are long-term kind of an investments, unlike the treasury bills. Treasury bills goes for 1 year. Bonds can move all the way from 3 to 30 years or something of sort. So the point is this. So it's always good to ask yourself, okay, fine, this money that I'm channeling towards investment, is it a money that I really need it? Is it the money that is paying my rent? Is it the money that is paying the school fees, if after all I'm paying any? If this is the money that I'm going to buy myself shoe with? Is this the money that I want to go with the, to the mall and shop? Because at the end of the day, say you want to buy a piece of land, you cannot shop with a title deed. You cannot go to a grocery store with a title deed and buy. No, you can't do that. Cash flow matters, all right? And this is why I always advise, especially the young guys, and I tell them, hey, guess what? If you want to get started, let's say into stocks, put that money that hey, it's like you're throwing that money away. Not like you're literally throwing them away, but it's like you're just putting it aside somewhere. You're just accumulating that money. You're just creating that what we call the portfolio, to a point whereby you reach to a situation where you say like, hey, guess what? I got some cash with me. I got some money with me. So the point is this, the period that you take, and I always say, if your investment ranges from, we can say this is 1, 2, 3, 4, 5. These are years, okay? Now, if your investment, let's say here you're standing, sorry about that. Here you're standing, all right? And you're thinking about investing, all right? And you're saying you have like 100K, you want to put it in 1 year. And then at the end of the year, you get yourself like 10% of 100K, assuming there is no taxes and what have you. So what you'll get your 100K, all right? Plus the 10,000 that you've gotten as your interest. So you have 110,000 at the end of the year. Obviously, this is not a lot of money. This money cannot be able to, make like a very good difference and what have you. But the good thing is that this money has actually gotten something. So if you do so the year 2, now you actually channel this money back to the investment. That now will be 110,000. Okay, it will be now the 10% of it. 10% of it, obviously it will be more higher than this amount of money. You can keep on doing the mathematics. Now that X number that you get here, let's say you get X number here, now it will be X here on the third year. 10% of your X, it gets you obviously more money. Let's say it gives you Y. Now that Y, 10% of it, it gives you, let's say, W. Now that W, subject it to 10% of it, let's say it give you Z. Now the point is this: you realize that this money or this amount of cash is actually increasing as the time goes. By the time you're talking of the 5th, 6th, or 7th year, or even 10th year, you're talking all the way to close to millions of shillings. All right, millions of. And remember one thing: this is the money that you did post or did you invested this cash because, hey, guess what? You have a business that is running. And I said businesses, they have what we call high risk, and they usually have high returns. And I always tell people like this: if you have not reached to a point whereby you have the potential to build the rentals, always make sure that at least you diversify your portfolio. You know, it's so risky when you have a successful business as you view it, because it's bringing you good cash. You've never built anything to do with the investments. You've never gotten yourself into treasury bills, to treasury bonds, for example. You've never gotten yourself to the money market fund. You do not have an account with the SACCO. You do not have an account, let's say, with a balance fund, bond fund, index fund, and what have you. Or what you have is a conventional business. Probably you're doing so because you never had an idea of what the areas where you can be able to invest. Because what we do, whenever we get money, whenever we get more money from what we call the more risky investments, we try to at least try to make the future a little bit certain. You cannot make it certain, that's for sure. What we do is that whenever you get some good cash out of the risky ways of investing, therefore what you do is that you channel your money towards a little bit of a certain investments. And this is where the investments now comes in. So now the investments now kind of assures you, hey, guess what? Yeah, I know it is not making me like a huge amount of money at the end of the day, but obviously it is doing an amazing thing. For example, take an example of a person who has like 200 million. You go maybe, let's say, in Nairobi somewhere, you buy a piece of land and you build yourself a flat, say maybe like 5 or 6 floors or something of sort. Now if you imagine the amount of money that you're raking in a month, and then you calculate the period of time that it will take you to recoup back that kind of a money, you realize that is more of a storing money than it's actually an investment. That is more of an asset than it is an investment. For example, you can take like 4 million, build like 8 rent or 8 one-bedroom units. Maybe it's giving you like 60,000, do the deductions about the tax and what have you, remain like 50,000. And then that 50,000, you can just calculate and imagine how long it will take you to recoup back the 4 million. It goes to a period of like 8 to 10 or 15 years before you get back your money. So you cannot really rely on that unless maybe you are doing the point of buying, building, selling. Buying, building, selling. Or option 2, you buy, you build, and then you build a lot of those units. You kind of increase your portfolio. That's time you realize that, hey, you have a very big chunk of money that is coming in as a cash flow. That's supposed you understand. And this is why I always tell people, some people usually think that the landlords or landladies, they usually have like a lot of money. These people, they do not have a lot of money. Or what they are doing or they did is to, instead of these 2 millions of mine stay in a bank just like that, idols, people are taking loan out of my money and then benefiting themselves. And I have a small piece of land somewhere, probably next to where I live. How about I set some 2 or 3 units there, and I'll be getting like my 30,000 or 40,000 at the end of the month. That is passive income. That money I can be able to pay the school fees, can be able to pay the utilities and what have you. Then whatever I'm getting from where I am, then I can be able to channel that towards bigger projects in future. That is exactly how you do it. So the point is this: if you do so with a short-term mentality, like, hey, I'm gonna get into this in a period of 1 year, then you're not an investor. You are opportunistic. An investor is someone who says, hey, guess what? I get like 50,000 at the end of the month when I do away with my, monthly, recurrent expenditure. I'm left with like 15,000. So this 15,000, I want to have a little bit of money at my disposal, like my emergency fund. I can take my 10,000, put it somewhere as my emergency fund. Now this 5,000, this is the money that I can quote unquote like dispose. Hey, I'll be buying shares worth 5,000 each and every month. So every month shows up, you buy shares worth 5,000. Each every month shows up, you buy shares worth that amount of money. So if you do so, assuming that it's not dividends and capital gain, that's 60,000 at the end of the year. Then that means If you add the capital gains, assuming that the share prices have actually increased, then you're going to get yourself a big amount of money. And on top of that, you're getting the share dividend. You plow back that amount of money. If you do so, by the time you're going to the next general election, you realize the portfolio that you've created, you're talking of apps of close to 500,000 and apps of that. And you're like, how did I manage to get myself in this situation? That is exactly how you create wealth. That is exactly how you actually develop yourself to a point whereby you can say, hey, everything now is good and everything now is amazing. So if you realize one thing, that your investment, it is not really, you know, a point whereby you're talking of years, talk of at least 5 years and above. It is below 4 or 5 years. Then at that particular point, we say, hey, maybe investments is not really your thing. It's only that you're looking forward into not having an idle money, and then get some interest, and then after that you can get back your money, go invest in whatever the areas that you want. But somebody who is looking forward into having a big portfolio in future, then these guys talk the language of years and years, above 5 years to be specific. All right, so the point is this: at all the time, it is good to understand yourself. It is good to understand exactly who you are, and also the challenges that you have at hand, the aim, the goals. All right, because if you understand your goal, if you understand what you're looking forward into, then at that particular point you can tailor that down. You can tailor down to suit your needs. All right, and then after that, then everything will be all right. Don't copy paste anything and everything that is coming from people out there, and then from there you can be able to invest and move to the next level. Guess what? That's the end of my video, but it's not the end of me posting a video each and every day. Hey, did you know that I always post a video each and every day talking about making money, be it either online, conventionally, investing, saving, money management, financial literacy, and all those kind of things. So if that's a cup of your coffee, and I bet it should be, I mean, seriously, who hates money? If that's a cup of your coffee, then consider this place home. How do you do exactly that? Down below there on your right, there is a small button written subscribe. It is in black. Hit that magical button, turn that notification bell. And by only doing that, a whole YouTube, can you imagine that? A whole YouTube will notify you whenever I upload a new good video. And if you would like to have a conversation with me, I'm open to that. How do you do that? My number is on the description of this specific video. If you click where it's written more, you get my number, you give me a call. I offer the personal guidance on the money, investments, businesses, and what have you. Obviously, at a cup of coffee's price. All right. And if you're out there, you're in need of my booklets about investments, you can as well grab them. A copy goes for only $2.80. All right. Anyway, for now, it's a goodbye. But don't forget, comment down below, tell me what you think. I'm a believer, just like an iron sharpens another iron, so do we learn from each other. And I get you. I understand that you got something, and as well, I can learn from. For now, it's a goodbye. See you in the next one.